What's going on, guys? It's the Bulls and the Bears back here with a midweek update video. It's been a while since I've shown the account details. I'm just now realizing this. So, yeah, here it is. I should have been showing this a little bit earlier. But yeah, we're up since April, since the inception of the wheel strategy this year, up over $4,000. Here's the account totals right here. This is a cumulative P&L. That's how I'm going to be looking at this, by the way, not by week or by month, just by in total. And you can see the P&L graph since inception has been climbing up. There's a lot of spikes here and there. That's usually related to stock positions. After I'm assigned on puts, the positions on the shares will go up and they'll go down because we were downtrending pretty hard. So that's the fluctuations in the P&L. But as for the stock goes up and I'm assigned, well then we go right back up on that steady uptrend. So up over 4,000, up over 24,000 in the account. Very nice. So we're going to get into what happened this week. If you saw my game plan video, well, those are the plays that I did. I did those plays, and if you follow me on Twitter, link in the description, you already know that. You already know that. So in the weekend video, on the game plan video, I went over DocuSign, Tapestry, Foot Locker, and ZIM. Here are my open positions right here. We'll zoom in here. I'm in DocuSign. I actually have two different contracts at different strikes, 68 and 69. So basically, the 68 was the original game plan. ZIM, I closed that early on Tuesday. And with the extra buying power, I sold another DocuSign put. Basically, I just wanted to get take some of the earnings risk off the table. Still holding Foot Locker. I grabbed two contracts because the strike was $26. So I was able to take two because it was a cheaper price. And the last one was Tapestry, $32.50 strike. Sold one contract for $40. So I collected 40 on Tapestry, 54 on Foot Locker, and a total of 71 on DocuSign. I did collect 40 on ZIM, closed it for 20 for 50%. So let's just get into that. So here we are. I updated the candles a little bit. They're different. They're like a more green, more red than the default candles. I'm not sure if it's even that noticeable. But Webull allows you to do that, to change the candlestick colors, and I think that's pretty cool. You can go white if you want. I'm going to go back to green. Okay, so we'll start with ZIM. ZIM, just like Tapestry and Foot Locker, three things, had earnings this week. DocuSign was the only one without earnings, so that was a pretty risky positions list for the week. 3 earnings plays. So I found an opportunity to take one off the table, and that was with ZIM. And it actually had earnings today. So if we go down to the 15-minute chart and turn extended hours on, you're going to see this is what happened this morning when ZIM reported. So it dropped quite a bit, and from upwards of $51 down to $48. So it dropped $3-4 per share. But if you look at the daily, back to the daily, you can see the strike I sold. I sold the 44 put. This on Monday it was about $50. I sold the 44 put, collected $40, and then go down to the 5-minute chart, take extended hours off because honestly I kind of like it without extended hours. It's a nice clean chart, and these are the last 3 days, right? No, right here. This is Monday. This is the start of Monday. These are 5-minute candles. So Monday I sold the put. We went kind of sideways. Tuesday came right here. And we had a nice surge, a nice morning surge. This big ass candle right here, these two 5-minute candles, as high as 52.10, which is about $2 per share higher than when I sold the put. So I actually was able to close it right there. I had 50% of the premium captured, so I sold one. I sold the contract for 40. I closed it for 20, profited 20, 50%. And I found that was a good opportunity because, one, like I said, I wanted to take some of the earnings risk off the table. And it was 50% premium. I keep saying this. If I can capture 50% of the premium within the first day, or especially in the first few hours, I'm taking it. Now, this was the next day, so it wasn't same day, but it was the open of the next day. I was like, well, that's pretty damn close to that little rule that I have. Plus, it gives me an opportunity to take it off the table, the earnings risk, so I did it. Took it right there. We did drop after earnings, so it was not pleasant, but we are still above the 44 strike. Here's the daily chart. And of course, we have Thursday and Friday left to go. ZIM, it could be a big mover. It dropped 6% today. It could possibly close below 44 by the end of the week, even though the earnings situation is done with. It still can drop below 44. So we'll see how that ends up playing out. But I personally took it off the table early. Foot Locker and Tapestry actually pretty favorable. So today's Wednesday. So the last two daily candles would be Wednesday and Tuesday. And yesterday and today, we had some pretty strong pushes, which is very nice. So I sold the put on Monday, obviously, on this candle right here. Is where I got into Tapestry. I sold the 32.50 put. And then Tuesday, we had this monster push up to 37. We went up over 3%, and we've maintained that today. So, and they actually report tomorrow morning at like 6:30 in the morning. So that's all going down tomorrow. But fortunately, we have this nice big cushion, this huge surge. Let's go to the 5-minute chart and zoom out a little bit. So I got in on this day in this box area, and we had a monster push on Tuesday and maintained it today, which is very nice. That adds about $2 per share of cushion in between the strike and the current price, the strike that I sold and the current price. So that's very nice. That makes me feel even better about the earnings risk. I feel a little bit safer there. Got a nice little bit of a cushion there. Foot Locker is actually the same thing. I sold a put on this day, this day being Monday, this little green candle, and yesterday and today we had a nice big push. Along with Tapestry, they pretty much did the same exact thing. They had the same formations essentially, and again that provided some nice cushion. Another $1.30, $1.40 per share of cushion between the current price and the strike that I sold. I sold the 25 strike, right? No, I sold the 26. Yeah, the 26. I don't know why this is 25. Another line earlier was off. I had to fix it before the video. All right, so that's a little bit closer than what it looked like before, but still there is that added cushion. And they report Thursday. So I don't have to worry about earnings tomorrow with Foot Locker. That'll be Thursday, but I do have to worry about it with Tapestry. So hopefully Foot Locker sustains this level up here, keeps that extra cushion in between the strike and the current price, and then we'll see what happens with earnings. Because right now we're over $6 per share above the strike that I sold. $6.45 to be exact. A $6.45 move in the current price is almost 20%. And that's just to get to 26. If it goes below 26, that's over 20% move after earnings. So even though there's earnings risk, I do think I'm pretty safe with this position. Anything can happen, but a 20% move is definitely not expected. So I do feel safe there. And lastly, we have DocuSign. This is the one that's not looking the best. So again, I sold 2 positions on it. When I closed the AM, that freed up buying power, and I sold another DocuSign put because I wanted to put the cash to work. I didn't want to add to one of the earnings plays. I wanted to add to DocuSign because it didn't have earnings, and it's a company that I think is at a decent value right now, has some solid support. Let's just go for it. So I sold the 69 strike and the 68 strike. So I have 2 horizontal lines, each of them being a cash secured put that I sold, and you can see we're testing those levels, and that's why if I go to the account details, I have a total of $126 loss, unrealized loss on the 2 puts because it's come down quite a bit. And since I shorted the puts and the puts went up in value, I have an unrealized loss. So that's unfortunate, but with playing the wheel strategy, you don't really care about the unrealized losses because they're not really important. You're going to let it expire and you're going to see whether you get assigned or whether they expire worthless. You don't really have to deal with that unrealized loss on the option. You will when you have the shares. But of course, you just sell covered calls as usual. So, and I like this area of support. And it doesn't have earnings, so like it could very well just maintain this area right here. However, the market, let's go to SpyQuick, is starting to roll over. I mean, it really doesn't look like it because we have 2 green candles or 4 green candles in a row. But if you really drill down, it does look like we've peaked a bit, especially if I zoom out here. You could see a line there. Actually, it will be better if I do a 6-month look with extended hours. Okay, so right here, if I zoom in at these tops, a nice horizontal area of resistance would be right here. And if you zoom out, you can see that's kind of where we just stalled out, right up there. And if I go to the daily chart and throw on the moving averages, you can see the 200 moving average is right here as well. That's kind of where it's stalling out. So on top of it all, RSI is overbought. This is a monster bear market rally. So monstrous that we're actually, you would say the bear market's over. We're now 20% off the lows. Therefore, we kind of started a new bull market, or at least the bear market is over, you could say. But I don't think the downwards trend here is over. I think we are not out of the woods yet by any stretch of the imagination. So it's only a matter of time before this monster move fizzles out, and I think we've finally hit it. And you can see how yesterday and today worked. I mean, we went up to that 200 moving average above the resistance and then crashed down pretty hard. Today we gapped down kind of significantly relative to recent days, sold off quite a bit, and then we had the Fed minutes release, and that kind of put a big surge in it, but then we sold off again, and now we actually trickled back down after hours. So, I mean, just the last 2 days here, you can tell we're starting to kind of come down a bit compared to every freaking day before, where it was just straight up. No matter what the news was, no matter what earnings releases were bad, it just went straight up. Now we're starting to come down, and there's many reasons as to why we would, so this actually makes sense, and I think we're going to be starting to come down for the remainder of the week and into next week, which all that to say, DocuSign could be in trouble if the market sells off some more. It already came down over 5% today alone. Let's look at that chart individually. So yeah, here's DocuSign. Testing that level, we got as low as 69.09, which is right at my strike. And we have 2 days left, so we're going to see if the support holds up. But I mean, if SPY really does come down, I don't think the support's going to be able to have a say in DocuSign going down. So we're going to have to see what happens with that one as well. But this is just a midweek update. We still have Thursday and Friday left to go. 69 strike and a 68 strike. So if I get assigned, my average price is going to be 68.50 with 200 shares. And then I'd have to adjust it with the put premium. I'll have to figure that out. But that's where we stand right now. ZIM closed for a 50% capture of the premium. Tapestry and Foot Locker, they're looking pretty good given that extra cushion that I got from yesterday and today's push higher. Foot Locker, the same type of deal. Tapestry releases earnings tomorrow morning, so I'm going to wake up to that pleasant surprise and see where we end up. And then Foot Locker is Thursday, and then of course Friday is Judgment Day. You know, is DocuSign going to be an assignment of mine, or are they all going to expire worthless and I can move on? Overall, I'm feeling pretty good because the earnings plays that I have open with Foot Locker and Tapestry, I feel pretty good about. And DocuSign, even though it looks likely that I might get assigned here, I don't mind it. I honestly don't mind owning these shares. And I think we have a great area of support down here. I think DocuSign is a good company that maybe got beaten down a little too hard. This is not like a Roku. This is not like a Netflix. This is not like a Zoom. This company isn't really going away just because the pandemic's over. So I think I don't think it's just going to keep crashing. I think it's a good area, a good bottom that it has. And if I get assigned, I think we come out of it pretty quickly. I think the premiums are pretty nice too. If I look at, let's see what the next week calls are like. Yeah, I'll definitely be able to get a couple $100 in total, at least $100 per contract, several dollars out of the money by selling calls. So I'm happy with that if I get assigned. So that's it, guys. Thank you all for watching. If you enjoyed, hit the like button. Leave a comment down below. Let me know how you guys are doing, if you guys are playing the wheel at all. And as always, I'll see you all next time.